Hello again, everyone. We are here with Shraddha Agarwal, and today we're going to be talking about a hot topic which I'm sure you will be interested in, and that's about rental income. Shraddha is going to lend us some insight on how to best leverage the income that we receive and how to claim expenses for it. Join me in welcoming Shraddha. Hello, welcome again.
Hi, Karen. Hi, thank you. So, as Karen said, we are going to discuss more about rental income. A lot of people from our community rent out houses, rent out basements, rent out a lot of things. We are too much into business. So, that this is one thing I get questioned about almost every day. So, the first thing is to determine if your rental income is a rental income or a business income. So if you're providing your tenants with services like, meals, cleaning, or additional services along with renting out the space, it is a business income. It goes on the form T2125. It is not a rental income because it's like an Airbnb or a hotel. You're providing additional services. You're just not renting out the space. But if you're simply providing the space in your house or in your office or, something you own, then it's a rental income and it goes on the form T776, Statement of Real Estate Rentals. Um, so it is very important to determine that. Secondly, the second point to determine is your share of ownership. So if you own the property on your own, it's pretty simple. You claim the 100% on your taxes, any rental income or expenses. But if you co-own it with your spouse or your friend, you can split the income and expenses. Now you need to know how much property you own to understand how much you need to declare on your taxes and to split the income. So if my husband owns 60% of the property and I own 40%, then it goes 60/40 on our taxes. So it has to be split according to the ownership percentage. So this is something people often do and often ask me. They don't realize that the property was, has the spouse's name. They think, it all goes on my taxes, and their taxes go up very high. Their tax owing increases. But always check your paperwork. If you are co-owning it, even if it's with the spouse, um, split the income. This will reduce your taxes.
Okay. Can you give us some examples on what kinds of expenses I can claim for rental income?
Sure. Now, that is again a very good question, and because rental income is so expansive and is so confusing, I will bring this point up. So, when you are determining the expenses for your rental income, first of all, sit down and determine if the expenses were current expenses or capital expenses. So, when it comes to current expenses, which the expenses which do not add any value to your property, for example, if you got a leaking tap fixed, if you got some sink fixed, your heater fixed, your boiler fixed, or if your carpet was dirty, you got your carpet fixed. It was dirty, it was unavoidable, so that doesn't add the value because your property already has the value of it. So that is all considered as current expense. This expense can be claimed in the particular tax year. So if I made this expense in 2020, then I can claim the whole bill in 2020. On the contrary, if you end up installing a swimming pool in your rental property, it increases the value of the property. If you end up paving a driveway or putting in, something expanding your property or making your backyard more beautiful, and getting a landscape made, or those things, they add value to your property. So those things are called capital expenses, and you cannot claim them in that particular tax year. You can claim depreciation on it. So any renovations you do, which are capital expenses, can be claimed under depreciation over the years. It'll still give you benefits, but slowly.
Okay, so you can account for those capital expenses, but from your explanation, the way I understand it is that those that are considered rental expenses are those maybe would go into the category of managing and maintenance of this rental space.
Yes.
And that would keep it current because you have to maintain it daily.
Correct.
Okay. Okay. Um, and now you're an expert in giving us all kinds of expenses that we can claim. Can you go over a few deductibles that we can take advantage of with rental income?
Sure. So as stated before, there is a long list of expenses you can claim when it comes to a rental property to reduce your income and get tax benefits. So the first one is advertising. If you put your advertising up and if you paid for it, yes, that is deductible. Any insurance, renter's insurance you pay to maintain your property or to protect you from any unforeseen expenses, that can be claimed. Any interest or bank charges on your mortgage, or if you have taken out money to rent the space or to buy the space and all those things, they can be claimed, so that reduce your rental income pretty drastically. Any office expenses, any professional fees, everybody knows that an accountant would charge or a software would charge extra when it comes to declaring rental income. So your accounting fees, your professional fees, your legal fees, if you got a contract made, it all can be claimed as an expense. Any management fees, if you hired a management company to maintain your rental property, that can be claimed under expenses. Any repairs and maintenance, make sure you sit down and determine that it's current or capital. The current expenses can be claimed when it comes to repairs and maintenance. Any salary, wages, or benefits, if you hired somebody to go down and clean the snow or maybe cut the grass or something, those things can be claimed. Property taxes, utilities, any prepaid expenses. So if you fixed something in your house for the purpose of renting it out, yes, those can be claimed. Any travel expenses. So this is one of the main things. People often do not keep receipts for it. So if I live in Alberta and my property is in Banff, and if I have to travel to Banff to maintain my property or to collect the rent, or if there was an emergency and I had to travel there, so those expenses can be claimed. So I traveled there with my car, so that mileage can be claimed. I stayed there for 2 nights, that can be claimed. Any meals I ate while doing so, that can be claimed. So you always keep in mind, always keep your receipts if you have properties out of province, or if you're a different state or different city. Always keep your receipts if you travel to maintain your rental space. That is very important. So this is just a little list. There are many things which you can claim. You can also refer Canada.ca for the whole list. It will give you explained, detailed information about what all will go under the rental expense.
I'm so happy that you went over these details because I firsthand know people who have, it's a deterrent, right, to get into renting your property because you think about the headaches of managing and maintaining it. But, knowing that you can even claim the professional rental companies you can hire, yeah. If you can claim that, that is just one headache that you don't want to think about. So you can come out in the green at the end, with all these expenses.
So that is what I wanted to add in the end, that a lot of people think, okay, we have a rental property, it's best not to declare it because it's going to increase our taxes with the rental income. But with all these expenses which you can claim, most of the times people end up showing a loss on their taxes, most of the times, not every time. So, and they end up getting benefits on their other income as well. So if your employment income was $100,000, and if you had a loss on your rental income by $5,000, you get benefit on the other side. So your taxes reduce. So it's always the best to declare such income. You always get benefits out of it.
Yeah, exactly. Especially in the end, if it's going to make you advantageous at the end, anyways.
Yes.
Perfect. Well, thank you again. You're a wealth of information. I thank all of you listening. My name is Karen Durham with ISC Entertainment Network. And I want to thank you, Shraddha, for giving us your time, your expertise, and we will speak soon.
Sure. Thank you. Have
Thank
a good
you.
day.
You too.